Hi friends, today we are going to discuss about important topic. What happened to Silicon Valley Bank? We know that a bank in US is either collapsed or closed or bankrupt or insolvent or whatever way you call. Uh, so that's what we are going to discuss. And you may question, sir, this channel you said it is for common people. What we are going to do by knowing why this Silicon Valley Bank is failed? Yes, but you should know this because we will compare this failure of Valley Bank with the Indian bank scenario. Probably we will try to do that in next videos. So this video we will try to discuss about what happened to Silicon Valley Bank and why this bank failed. Okay, so uh, yeah. So background of the Silicon Valley Bank, 16th largest bank in US in terms of asset size. And if I have to compare with Indian bank, one of the topmost private banks in India, India's asset size is as equal as Silicon Valley Bank asset size. I don't want to name that bank. One of the India's topmost private bank asset size is equal to Silicon Valley Bank asset size. And SVB's deposits more than quadrupled. So from $41 billion at the end of 2017 to $180 billion at the end of 2021. Why there is a why there is a surge in the deposits? Reason is that we will discuss in the next slide. Yeah, it's there in this slide itself. Is there deposits increase due to little higher rate interest rate offered by SVB, Silicon Valley Bank, and the SVB Bank is preferred bank for startup companies where PE and angel funding money parked in SVB bank accounts. So, in from 2017 and 2000 till 2021 end, the interest rate was not increased by Fed Reserve. After that, Fed Reserve started increasing their rate, similar to our repo rate in India. Repo rate also started increasing from May 2022 by RBI. So from 2017 to 2021, interest rate was not increased by Fed. So this SVB was offering little higher interest rate for deposits compared to other banks in US, and this is the preferred bank for startups. And if the PE or angel funding is given to startups, and they used to put a condition that you please open an account in SVB bank account and you park this money, whatever the money given by the PE or angel funding to the startup, they used to give an instruction to startup that you please park this money in the account opened in SVB bank account. So that's how the deposit got increased in Silicon Valley Bank. And this again, it's a startup focused bank. Asset size is $2 billion in total asset size, and as of December 2022, $175 billion in total deposits. So this is the scenario. So what the bank can do from the deposit? Either they have to do lending or investing. Simple. By any bank in the world, and we will see the scenario now. SVB's loan book increase grew only from 23 billion to 66 billion. That is lending. Whereas investment is increased. In a large chunk of investment, $120 billion of investment invested in US treasuries or federal agency backed mortgage backed securities. Let's not get into what is mortgage backed securities as equal as US treasuries. Similar to our government bonds, Indian government bonds or Indian treasury bills, whatever, compared to our Indian scenario. It is they invested $120 billion in US treasuries, which is considered to be the safest investment in the world. I discussed this in Fed Reserve versus RBI video. You can go and check that video also. So US treasuries, even now, it's considered to be the safest investment in the world. So now the question comes: okay, they invested in the safest investment in the world, that is US treasuries. So is investing in government securities wrong decision? You will see. So investment in government securities have to be classified as HTM, held to maturity and available for sale. HTM means, I said, held to maturity, no issue, to be shown in the balance sheet, whatever the purchase cost. If I purchase a government security, whatever may be the purchase cost, the same cost it has to be shown in balance sheet, and that security, government security will be held till maturity. AFS, yes, problem. Mark to market. Suppose if I mark a government security as available for sale, then if I purchased it for 100 rupees, now the current market cost is 90 rupees. Then I have to show it in the balance as 90 rupees. So 10 rupees loss I have to incur, or I have to make a provision. I have to make a provision, or I have to incur. If I sell, I have to realize that loss. 10 rupees is a loss. Suppose if I don't say, if I'm not selling currently, then I have to make a provision for that 10 rupees loss, not rupees, dollars. So that is what I mentioned. If current market cost is lower than purchase cost, the loss has to be booked. The loss has to be booked means if it is sold, then you have to realize that loss. If it is not sold, but if you have to close your balance sheet for 31st December, because for US it is 31st December, for us it is 31st March, India. So if you have to close the book, you have to show it in the balance sheet, then you have to provide for the loss in the P&L. So that is what happened. So how it has happened? Again, I discussed this in Federal Reserve versus RBI. Interest rate and bond prices move in opposite direction. If interest rate increases, bond price decreases, and yield getting adjusted and increases accordingly. So this is the worldwide scenario, and it's a common scenario. And as I said now, I told you in 2nd February 2023, the last time when the Federal Reserve increased their benchmark rate from 4.5 to 4.75 percentage. From March 22 to 2nd February 2023, the Federal Reserve increased their rate from 0.25 percentage to 4.75 percentage. As I already told you, till December 21 end, the interest rate was not increasing. So from 22, the interest rate was started increased by Federal Reserve, so 0.25 to 4.75 percentage. So when the interest rate increases, what is the first statement I have said? Interest rate increases, bond price decreases. So available for sale, L to maturity, both the government securities prices would be decreasing. So L to maturity, even though it is a loss, it is unrealized loss. Available for sale, if you sell, you have to really book the loss. If you are not selling, then you have to provide for the loss. You have to show it in the balance sheet in the current market cost. So that is for that loss made the Silicon Valley Bank to collapse. And for Indian scenario, RBI also increased the repo rate cumulative of 250 basis points to 6.5 percentage since May 2022. So almost in the last 10 months, 250 basis points RBI also increased. So that is how happened. Why it has happened? So if interest rate increases, what happened? The existing depositor, they started withdrawing funds, and the startups and they move towards higher interest rate of deposits given by other banks, so which resulted in a cash crunch and solvency issue. Not only that, even the startups also they started withdrawing the funds because they didn't get the fresh funds from PE funding and angel funding. So whatever the funds they parked with SVB, they started withdrawing. So to meet the demand of withdrawal of deposit, SVB Bank sold 21 billion of available sale with a loss of 1.8 billion dollars. So they were getting yield of 1.79 percentage SVB on those 21 billion dollars available for sale government securities, but current yield rate is 3.9 percentage. And they tried to raise 2.25 billion in equity and debt, but that also failed. And for your information, so bank is failed because of too much of investing in government securities, and Federal Reserve started increasing their benchmark rate from 2022, and whatever the existing investments held by Silicon Valley Bank in government treasuries, those prices, government securities prices started decreasing. So for they have to book the loss, either unrealized loss or realized loss. So that is how Silicon Valley Bank failed. For your information, FDIC insurance for deposit 2.5 lakhs dollars per depositor per insured bank. So, but as of end 2022, only $21 billion of SVB Bank got insured with FDIC. So poor asset liability management. That's why happened. So so far we have discussed with the dollars and billions. For if anyone want to know the Indian value, 1 billion is equal to 100 crores. $1 is equal to 82.6. So you multiply yourself and you find out what is the asset size, what is the deposit size, and what is the loss incurred in Indian rupee value. So whatever we discussed, lot of figures we discussed, just I put a simple balance sheet. Don't think this is the actual balance sheet of SVB. Just for understanding purpose, whatever lot of, we discussed some figures. So those figures I put it. The SVB balance sheet, what happened? Loans are 66, HTM is 96, AFS is 24 billion dollars, others 22. So total balance sheet size is 209 billion dollars. This is what I mentioned in this slide actually. 209 billion dollars. You see this here. $200 billion. So that based on this figure, I have put a very simple balance sheet. $209 billion. Equity $11 billion only. Deposits $178 billion. Others 23. So what happened? This HDM and AFS reduced by value of that say government security reduced by 30%. So this 96 become 67. 24 has become 70. This last 7 is you have to provide in the P&L. This 29, even though you need not provide, but still it is an unrealized loss. That is why the bank is failed. Even though the SVB invested in the very safest asset in the world, that is US government treasury, still the bank got collapsed, failed, bankrupt or insolvent, whatever way you call. So where there is a hit, there is a run. Who are all responsible? Management, because they failed to do the proper ALM, asset liability management. Auditors, definitely they should have probably in the 2022. I don't know. I have not seen I have not read the annual report of SVB, but I think they could have cautioned that too much of investment in government treasuries, because normally banks have to do more of lending, less of investing. But in this scenario, in the SVB scenario, is more of investing, less of lending. Rating agencies, again and again they are failing. After this, when the depositors didn't get their money, when the depositors were not allowed to withdraw the money from the Silicon Valley Bank, then they are reducing the rating. So rating agencies again and again they are failing. Investors, again, some investors should have raised the question in the annual general meeting, why there is too much of investing, less of lending, why there is too much of investing in government treasuries when the rate when the rate benchmark rate is increased by Fed Reserve. I don't know. I have not read the minutes of the meeting or annual report. Whether some investor raised the question, I don't know. So everybody is responsible. So till now, Silvergate Bank failed, Silicon Valley Bank failed, or collapsed, or bankrupt, or insolvent. Signature Bank failed, and Credit Suisse Bank failed, and UBS purchased that, bought that bank, bought Credit Suisse Bank. So who all are responsible must be made accountable. Simple. Okay, let's come to Indian scenario. How much of our deposit amount is safe in Indian banks? We will see that in next video. Please watch and subscribe Investment with Tiagu YouTube channel, and please click bell notification for any future videos. Thanks.